Hello guys, welcome to the Trading Parrot. As we approach the market open this Monday morning, we are seeing a little bit of a shift in the order book right after we took the CME gap that we talked about yesterday in the Sunday special. We look into that, and I believe that since now we have run out of short-term motivation to go into the 110, there's been some new orders placed as well around there as resistance. Let's have a look at how the order book is looking, and let's try to understand why could it be that they are doing this. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Yesterday we got almost 5,000 views and almost 600 likes. Thanks so much. The popularity of the video also brought loads of comments saying that the distribution or the move of the altcoins is just spreading FUD, and I'm gonna tell it in your face, this is not FUD. 80,000 Bitcoin moved from an old wallet that hasn't moved in 14 years, that were presumed lost, and that is the all-time high event like this ever for Bitcoin. There is no FUD. That is potential selling pressure, regardless of any single theory behind it to try to explain it. Period. Let's start with the Bitcoin MVRV bounces off 365-day average. Is the trend still alive? Historically, as long as the MVRV stays above this moving average, the uptrend tends to continue. As you can see in here, is bouncing off that trend line. But this cycle, we've been up and down really. There hasn't been a perfect respect for the moving average, as you can see here in this period around the 5th of August in 2024. It is also highlight that once you lose it, like for example in here in 2021, at least in the past cycle, we went straight into a bear market. And once you conquer it above it, the moving average, you stay in the bull market, with the exception of this box in here. From Glassnode, we also have the summer lull is here. BTC is nearing 110k, but volumes are drying up. And we covered in yesterday's video, I encourage you to watch it, or at least go and scroll through the timestamps. There is a chart that I shared in yesterday's video when we do an analysis of the ratio between spot volume versus futures volume, and how can that be used as a very accurate alpha. This is kind of an extension of that, because we have 5 billion in spot and 31 billion in futures. In this case, the ratio shows a lot more of futures, which is one alpha explained yesterday, but the second one is that both are in decline at the moment. As you can see in this chart, in orange is the spot volume, and the line in purple is the futures volume. And material indicators is showing us with their fire charts that there's been an Iceberg order that came in as soon as we attempt to break 110 this morning. We'll look into that more in detail once we go into Bookmap, Market Monkey Terminal, and Hivelo Capital. There is actually a big shift, and that is skewing all the bid-ask ratios by a big proportion, and that is what I meant when I started the video in the beginning. Make sure you stay for that. And yesterday I made a big call to comment on my Telegram channel, to leave a comment on this post if you're interested in doing advanced quant collaboration. I'm talking about the topics written in here. If this sounds like Chinese, don't worry, you can ignore it. I'm just interested of being part of a group of people that are advanced quant traders to do something collaborative and see how it goes. And the markets apparently are taking a good reading about the tariffs deadline, the fact that it won't take effect immediately. So there's a bunch of discussions going on in the most recent articles, all of them pointing out that point. Let's go into CME and let's see what happened over the weekend. In yesterday's video, I point out that we had a gap around 110 CME premium, and you can tell that more or less we went straight into that. We closed the gap, we fulfilled the imbalance that was created from Thursday into Friday. You can see the gap there and how the price wick into that and then stay at the previous level, and now seems to be just going sideways. But we do have a CME new gap that we formed over the weekend. Remember that the candle close was around 108. On Binance, that was 107.5, and that is all this gap that we have in here, and that is still pending. So price, after having gone with this motivation up, it took the two fair value gaps that I showed you yesterday, one of them overlapping with the CME gap, and right after that it left a couple of fair value gaps to the downside. So now there is no fair value gap left in green to the upside, and there is no CME gap either. The only one we have now is to the downside, pointing towards 107.5. Yesterday it was a little bit of a crazy price action. We saw price of Bitcoin a little bit pumping over Sunday. That hit my stop loss in profit, so it forced me to take profits. This time I decided not to move the stop loss higher, not to remove either the stop loss, so I just let it take profit. Luckily for me, we went into the CME gap and I kind of re-entered with my short at a higher price right after closing at the lows, and I'm seeing how it goes. Let's look at the 4-hour time frame. Remember yesterday we were talking about the potential to regain the falling wedge, that we needed to break below 107 to produce an actual breakdown of RSI. We said this is only a price breakdown. The RSI is not fully breaking down because it was reclaiming this line in here. As you can see, we are still holding support on the 4-hour. Right now we are testing that support as we speak. If we lose this support, we could go into RSI 40. That is the next line of support. But if we continue to hold the support, we could easily ride all the way up to levels of RSI 66, for example. That coincides with around 110.255. At that point, we will have already hit that wall of selling pressure. You can tell that perfectly they're placing that selling wall more or less around RSI 66. Right after that, we have the resistance of 71 coming from this descending channel. That is the small micro channel, but we have a large channel as well that gives us that resistance at 83. So 83 is located at 116, 71 is located at 110.3, and now we need to look into this most immediate support, that is the 53, and then we have the 40. Well, we run out of levels on the reverse RSI, but that's fine. You can see that the support is being tested at the moment. That is pretty much 108.7. So I guess it's more value if we put in here the next level of support just to keep an eye on it, which is RSI 40 at an RSI of 107.2. For as long as we hold that 53, we retain pretty good chances that we go into 110 or RSI 66. That shouldn't be that difficult, but the problem is that the bid-ask ratio as we speak is changing, so I need to keep an eye on that, because if it skews too much into the ask, it might cause that the algos start rug pulling, in which case we could go into the CPR levels. The pivots are still there for the month of July at 106 into 104.4. Every time I say 104.4, always remember the weekly support, and we still have this yellow line in here in case we want to go into that resistance at 110. On the daily, remember yesterday we were below the support. Thanks to the pump we had into the candle close on Sunday, we regained the support. We managed to close above it on the daily, and on Monday we are retesting that support once again. Let's calculate properly that support because we are below it at the moment, and that is more or less an RSI of 56.5, let's say, and you can see how it's being tested right at the moment. I will say we are slightly lower. And a reminder that this is a double bottom that we've been calling for a potential breakout into 121. So far we carry on for 1, 2, 3, 4, 5, 6 days that we still don't materialize that breakout. We just go up, we take liquidity, and we stay below. So watch out with that. In case it fails, all these weeks are going to turn into a liquidity hunt. If we put a daily close above 109.5, then we are definitely being on the right side of the breakout bullish. So all eyes on this breakdown as well, because that could cause a failure. I will say on the daily we are in a squeeze in here between this resistance for continuation to the upside of the momentum versus a breakdown on the daily threatening to go into the next support at RSIs of 38. The RSI of 38 is at 101.8, and it will be really good news for my short if we go into that. If we break out into 120, I'll be adding into my short. I'm not gonna trade the breakout in here, at least as of now. On the weekly we have good news. Let me show you from closer what is so exciting. You can see that the highest close in history of Bitcoin up until before Sunday was 109.004. That is on the 19th of May, and since then we haven't managed to do any higher than that in terms of candle close. Last Sunday we managed to secure 109.2, so that's $200 higher than this green open candle in there. Therefore, it is a humble but still a weekly breakout in here. Now we are slightly lower than the breakout, so we could consider that this week is going to be kind of a retest of confirmation. Let's see if we can speed up in here the breakout to the upside. I find so funny, I still cannot believe that people watch the video on Sunday, they see an SOPR all-time high, an all-time high of movements of coins on Bitcoin, and they call all of that FUD. What is the definition of FUD really? This is data, this is not FUD. If you think that this all-time high or the movements of 14-year-old coins is FUD, you're just in denial. And some very cool new indicator, new metric that I'm incorporating into my dashboard comes from Axel. Once again, great job. This one is applying percentiles to the funding rate, the last 30 days percentile versus the all-time. And you can see that during the bull market, coincidentally, if we focus on this area in here, every time that this metric pinches 50% is around a great time to accumulate. Like for example, at these lows, this specific low in here, then there is this right before the breakout of the megaphone pattern, then at around 74k, and currently we are at 54.8, getting closer to that sweet 50%. Just consider one thing, that all these metrics, if you enter territory of bear market, then the metric can go into 2%, so it can literally just crash from 50 into 2. So it's a rinse and repeat until the pattern breaks. Also consider that in the previous cycle, the areas to buy were way below 50%. For example, mid-2021, the funding rate reset to 2%. This is clearly a market futures dominated, as we've been seeing in the recent videos, and probably because of that is not resetting during this cycle to 2%. It's just resetting to 50 because most of the people are on futures, I guess. Today we are back at above 70 with 73 in greed, almost 2 points away from getting into extreme greed. And something really interesting is that after this sell signal, thanks to the price moving up, this is giving us again a warning sell. Is that possible? Why we didn't get a warning buy in here? And that is because the price went up too quickly and it didn't allow for the stochastic to fully reset. Remember, Cerberus tracks Bitcoin, allocations, all coins, and all stable coins. And if you look back in history, for example, in here we got a sell signal and we didn't get the warning buy. We went straight into warning sell. So this warning sell could be indicating that this is another local top. Of course, the signals that play out the most during a bull market are everything to do with the buy signals, not the sell signals, but still, we could potentially settle next Sunday a warning sell, which is a big deal, in my opinion. Looking at liquidation pools, everything stays the same. We got new short-term liquidity now piling up at around 113. Notice that before it was mostly around 111, so that 113 could give us a lot to talk about in the next few days. So up until yesterday, there was a sell wall located around here, not that substantial. We have 400, 300, and 300, and as we enter Monday, that got moved out. That was actually at 4 p.m. on Sunday, and that allowed the price to start moving higher, but it created equal lows, equal highs. That probably caused that all the metrics around bid versus ask started leaning towards elevated support in the close proximity to the price, because this got removed. And you can see how the algos get immediately excited with that and they start pumping. Let's look at the liquidation map of the past 30 days. Something that stands out when I see this is how it's piling up with longs in here. If you go back in time and you watch some of my videos during the past week, the king was all the time 109 and 111. Now we can see that 103 is becoming larger than 111, at least in the past 30 days, followed by 106. So number 2 is 111, number 1 now is 103. Now it's gonna be 2 weeks that we don't have any significant liquidation. This is just routine liquidation, but there's nothing that goes close to 1 billion, and I'm expecting that we should be seeing that. After all, if you remember, we also say that the CPR model says that in July we should be seeing increased volatility because the width of the model, it's only 37k. For example, in the previous month it was 55k, and in March it was 74k of range. So this month is definitely expected to be very volatile. We are in a squeeze after all, 3 months just staying in this range, almost not touching support or resistance, just sticking around the pivot. That's definitely calling for testing the extremes. Not necessarily the extremes, but at least 112,500, which is the first resistance, or the first support sitting at 100k. Material Charts was posting about this iceberg that is at 110 with 45 million that came in just in time to stop the move above 110k. If we look at the different sizes of positions, they're just all going sideways. Purple was slightly going up, but to be fully honest, all of this is just sideways. The order that appear on fire charts, I can see it perfectly in here. It started from 4 a.m. this morning, right when we were starting to move up. Of course, placing that order there caused the algos to go back into the median because of the resistance that is perceived right above the price. And let's get serious now. Let's look into high block capital. Remember, I'm using the professional account, so I got a bunch of things that not many people have. And thanks to the new metric builder, which is fantastic to create your own indicators based on order flow, order book data. For example, in here, what I'm doing is basically creating bands of bid and ask from 0 to 1%, 1 to 5, and 5 to 10. That allows me to see an aggregation of where are the limit orders placed in the exchange on all exchanges at the same time. And we can see that the green line is coming back down after being at the very top. What I'm doing is I'm applying exponential moving averages to the metric of the bid versus ask ratio 0 to 1%. That is the red, 1 to 5 is yellow, and 5 to 10 is the green. So that support from 5 to 10% below the price, so to be very clear, so that starts from around 103 to 10%, which is 97. So that range of 6k roughly from 103 to 97k. Now there is an ongoing reduction of limit orders to hold the price. How significant is that? Well, it is something, right? So they're moving those orders. That could be that they're placing them closer to the price, or if we see all the bands coming down, it means that no one cares about holding the price at the moment, or there is a shift into placing them as a resistance. It could be any of those options really. So now that we see these lines, what we do typically is we try to see if we can spot any movements on these lines in the heat map or in the actual order book in here to confirm what we are seeing. We can also look into the heat map in here with the different deviations. So far the 10% still shows 83%. We also see 73% on the 5%. So I'm inclined to think that maybe this 10% is just placing the orders for selling very high, and that's why that ratio has seen a shift in coming down. Funding rates are in the positive. That means that there is a shift into being long. We are at 37 in terms of longs on Binance. The delta is extremely flat in this area of liquidations. In a nutshell, I will say that for as long as the 4-hour is holding these levels of support, we continue to have higher chances to go into the next level of 110.3, corresponding to the RSI of 66. But we do need to monitor on the daily basis a potential breakdown in here. I'm gonna do an analysis on general markets in the next video to see how pre-market prices are looking as well. And before I let you go, I'm gonna also show you the order book on Bookmap and give you my take on these levels of support and resistance together with the bid-ask ratios that we captured just now. Remember that from the 4th of July into the 11th of July, you can get up to 50% discount on Bookmap. This is pretty much a professional tool that runs local in your computer, not just for crypto, but for stocks, indices, forex, and everything, that shows you all the liquidity in the order book like X-Ray. It's got a ton of features in a huge community as well. You can use the QR code appearing in the screen or the link in the description to get those discounts. So I have placed now everything with 4-hour candles, and I'm capturing the liquidity of 7 days back in time. That is allowing me to see the 106 week's support, 105.5, 107.5, and now these orders at around 110, I will say they are already gone. They were never that big, really. We have only 252 at the moment. I'm gonna jump now to seeing the general markets and see if this price action that we are seeing at the moment has anything to do with pre-market prices, anything to do with tariffs and all of that. I'll look into the news as well. That's coming up next. Thanks so much for watching. I'll see you in the next one. Bye bye.